Internal Revenue Service IRS tax news. Taxpayers must pay no more than the correct amount of tax. IRS Tax Tip 2020-102, August 13, 2020. A taxpayer may owe money when they complete and file their tax return. They have the right to pay only the amount of tax legally due, including interest and penalties, and have the IRS apply all tax payments properly. This is one of the 10 rights known collectively as the Taxpayer Bill of Rights. There's a link to the Taxpayer Bill of Rights here. There'll be a link to this in the description. This right to pay no more than the correct amount of tax means taxpayers can file for a refund if they believe they overpaid. So if you think you have overpaid, the IRS is actually pretty good at being able to track the payments that have been made and apply them out to the tax due. Obviously, if you overpay, it could be for a couple different reasons. Possibly you wrote a check that was over and you overpaid in that format over than the liability on the tax return, or the tax return was incorrect and possibly you can amend the tax return if you do so within the statute of limitations. Back to the text. Write or call the IRS office that sent the taxpayer a notice or bill. Taxpayers can do this if they believe the notice or bill is incorrect in any way. When challenging information in a bill or notice, taxpayers should be ready to provide copies of any records that may help correct the error. If the taxpayer is correct, the agency will make the necessary adjustments to their account and send a corrected notice. So a notice is going to be a common type of way that the IRS will make corrections that they believe need to be made corrections. For example, if there's an error on the tax return, possibly you had a job, let's say for imagination purposes here, that you worked at a job and you got W-2 wages, but it wasn't a job that you worked for very long. It was a side job, so you got some income. You didn't include it on the tax return. The IRS most likely will fix that by simply picking up the W-2 income that they have on their side, because the employer would have sent them the W-2 income, correct the tax return that had been sent, in accordance with what they believe it should be, send out a bill saying, hey, look, we got a W-2 that wasn't on the tax return. We've adjusted it for you. This is what the tax we believe is. This is what we think you owe based on the new information. If you agree with that information, then of course you can say, okay, I agree with that, and send in whatever money they're asking for and comply with anything they're asking for. If you don't agree with that, if you're saying, hey, I didn't really work for here, they got the wrong name, the wrong social security number, I don't know where this documentation's coming from or something like that, then you can argue the note. You could say this is incorrect and basically reply to it. So when you get a letter from the IRS saying, hey, we've made a change, we recommend that you make this change, then that's really a recommendation. That's what they believe is true based on the information they have. If it's not true for whatever reason, then you can, of course, contest that. If you want to do so, then you're going to have to provide evidence. Note that the tax code is a little bit different than you might think in other types of law. Like if someone was going to charge you with a criminal act or something like that, you're innocent until proven guilty. IRS is pretty much the opposite way, right? If they have a W, you owe the tax until you can prove that they're wrong in some way, is kind of the way it works for taxes. So if they have a 1099 or a W-2, and they have evidence on their side saying, hey, look, it looks like you got payment that should be taxable income. It's not reported on your tax return. We think this is what it is. We think you should owe that money. Then it's basically going to be on you to furnish the evidence to say, no, the conclusion you came to is wrong, and this is why, and then show that evidence. But you do have, the right to do that. Back to the text. Amend a tax return if they discover an error. They can also amend this return if there were mistakes in their filing status, income, deductions, or credits. So if you actually filed the tax return and you're saying, hey, it was wrong, I missed something. Maybe I had a more beneficial filing status. Maybe I filed single and I could have filed head of household or something like that. That would have a significant impact on the taxes that would be there. Maybe I didn't pick up a credit which I was qualified for that I could have picked up. Maybe I had some deductions that I didn't put in there. Well, you can then amend the tax return and send in the amended tax return, which can amend, of course, the amount of the possible refund or tax due on it. Back to the text. Request any amount owed be removed if it's more than the correct amount due. Request the IRS remove any interest from their account if the IRS caused unreasonable errors or delays. So when there's an outstanding tax due note, the IRS sees it as a loan, right? They're saying, well, you owed us money and you didn't pay us the money, and so now we're going to call that a loan and we're going to charge you interest on it. Now, if they're charging you interest and it was basically their fault for delaying the payment, say you sent in the payment, for example, and they didn't, they didn't process it for some time and charged you interest on it, then you may be able to say, hey, look, that wasn't my fault. The payment was in place and you charged me interest on the payments, like that, for a check that just didn't process, and possibly be able to reduce the interest charge in a situation such as that. Submit an offer in compromise asking the IRS to accept less than the full tax debt if the taxpayer believes they don't owe all or part of the debt. So the offer in compromise is another option, and you want to look into the offer in compromise. You can actually ask the IRS, basically, could you lower the debt for certain types of reasons? And if obviously if they don't owe the entire debt, then you can make that argument that it's not, or possibly you can make the argument saying, hey, look, you're not likely to get the entire debt because the tax owed is very high and my income threshold is low, and I don't have, possibly it's not likely that you're going to get paid back within the lifetime of these payments. So it would be on the benefit to both parties in that case to lower the debt. So in order to make an argument like that, you would have to basically give them your financial statements for a personal level, right? How much income do you make per month? How much do you have in terms of balance sheets, items, assets, and liabilities, and determine if you can basically go into an offer and compromise. Remember that the offer and compromise is something that will often be advertised. So if you see an advertisement that's like saying, if you have $10,000 or more outstanding IRS debt, then you may qualify for an offer and compromise or to reduce that tax debt due to this, that, and the other thing. So just remember, if you go and get help with an offer and compromise, make sure that you're going somewhere. I would get a reference from somebody to look into the offer and compromise, and so that you know that you're going with someone who's got your best interest with a offer and compromise, because they don't always go through. If you're looking into an offer and compromise, they can go through, but it's possible that you don't qualify. You also want to check out the offer and compromise on the IRS website. The conditions for the offer and compromise are somewhat, laid out pretty well within the IRS website, so you can dig into that if it's something that is interesting to you. And then when you look into more information about it, you can have an understanding of it as you go into that.